I'm going to show you how to analyze and calculate earnings per share, which is an important number used to analyze the valuation of a company. And the earnings per share tells us for one share of stock, how much net income did the company earn? And if we look at the earnings per share for just one period, it doesn't tell us enough information about the company. Instead, we need to analyze earnings per share by looking at the trend over a few years. When you look at the earnings per share over a few years, that allows you to calculate the growth rate of a company, which I'll show you where to find the growth rate later on in this video. And the more the company grows, the more your stock value will grow as well. The earnings per share is used to calculate another important number called the price to earning ratio, which I'll get into that in another video. To calculate earnings per share, you need to take the company's net income divided by the number of shares the company has outstanding. So if a company has 100 million in net income and 25 million shares outstanding, then the earnings per share will be 100 million divided by 25 million, which gives us $4. As stock investors, there's two types of earning per share calculations that we need to pay attention to. One is basic earnings per share, and the other is diluted earnings per share. Basic earning per share is the calculation that we just did above, where we take the net income divided by shares outstanding. So this equation takes into consideration all the common stocks available in circulation. Diluted earnings per share divides the net income by the shares outstanding plus everything that can be converted into shares in the future. For example, if a company pays an executive through stock options, which can be converted into 500,000 shares of stocks at a later date, that 500,000 shares will be added into the denominator of the diluted earnings per share equation. So the diluted earnings per share gives us a more accurate picture than basic earnings per share. And some examples of convertible securities are stock options, stock warrants, convertible bonds, and convertible preferred shares. And these all gives the owner of the convertible security the option to be paid through stocks. Another way to calculate earnings per share is by using the adjusted earnings per share. So let me explain what that means and why that's important. In a company's income statement, there will be one-time costs and one-time revenue that isn't part of the business operation as a whole, but it gets calculated into the net income. The adjusted earnings per share takes these numbers out and only takes into consideration the values that are part of the daily business operation. So keep in mind that the basic and diluted earnings per share you see on the income statement includes the one-time inflated cost and income that isn't part of the daily business operation. Let's use a real-life example to calculate earnings per share. And I'll also show you where you can find this information without calculating it yourself. But before that, I made a 4-step guide on how to evaluate and find stocks that has a durable competitive advantage for long-term investment purposes. And you can find that in the description box below. Also, if you haven't subscribed yet, hit the subscribe button and the bell so you'll be notified every time I post a new video about investing. Using Morningstar, let's look at Costco, so C-O-S-T. And then we're going to be in quote, key ratio, and full key ratios. So you can see here for the key ratio tab that there's net income in millions and shares in millions. So let's take a look at the 2020 numbers and just calculate it for earnings per share. So we'll take 4,000 in millions divided by 444 equals $9.01 about per share. So on here it's $1.02, which is okay because these are all rounded numbers. And then we go to financials, and in financials we want to be in income statement. You see that right here, income statement, and we want to see the earnings per share basic and diluted. So these numbers you don't need to calculate it yourself because it's going to already be here. For long-term investing purposes, we want to see that the diluted earnings per share is on an uptrend, which we do see here for Costco for at least 5 years. And on Morningstar, you get to see the 5-year data for free. And when we're looking at this earnings per share over a few years, it's actually used to calculate the growth rate. And we can find this growth rate number on finviz.com. And you see in this column is the earnings per share growth rates. It shows you the actual earning per share for this year and past 5 years. but the other ones are projected earning growth rate because it's estimating the future values. For example, earnings per share next 5 years, next year, next quarter, next year. The growth rate is very important in calculating the intrinsic value of the company as well as the PEG ratio, which I'll go into in another video. The earnings per share is calculated using the accrual method of accounting, meaning the income and expenses are realized into net income before the money is actually received or paid out. Because it uses this method of accounting, it's also easier for companies to inflate the earnings per share value. Therefore, we don't use the earnings per share to determine the intrinsic value of a company. Instead, we use values from the cash flow statements to calculate the intrinsic value of a company. For more videos, check out the playlist on stock investing terminologies, as well as a playlist for stock investing for beginners.